Here's some information on characteristics that GASB feels are very important for financial statements. Almost all of the characteristics are the same from a financial statements for a corporation as for a school district. GASB went ahead and listed 6 characteristics that they think accounting data must possess, and these are the same 6 characteristics that exist for financial statements. The difference is there's different levels in the financial accounting structure regarding how these characteristics relate to each other, and GASB just went ahead and listed them. But they're basically the same thing. This understandability. Information should be presented as simply as possible, and to be publicly accountable, a government should issue financial statements that can be understood by those that may not have a detailed knowledge of accounting principles. Reports should include explanations and interpretations that help users understand the information provided. It isn't necessary that somebody be an accounting expert or that somebody be an expert in schools. It just has to be understandable that the average person with average business knowledge can understand what's happening on those financial statements. For reliability, the information presented should be verifiable and free from bias, and should be faithfully represent what it says it's going to represent. Information should be comprehensible and not be misleading. Someone else should be able to come to the same conclusion by following the same processes to make that information reliable. Relevance is one I'm amused by relevance in a lot of organizations, because the information has to be important to making a decision. That's the whole reason we use information, is we want to make decisions about it. So relevance has many of the objectives of financial reporting. If the information provided in a financial report isn't timely or reliable, it's not relevant. So we can't make a good decision on that. Then we come across timeliness by itself. And the financial report must be issued promptly so that way we can make decisions for the next year and go forward. The whole idea behind feedback is we take information, we learn from it, and we move forward ahead. So we have to make sure that the financial information is presented to the people who are making those decisions in a timely manner. Consistency. If we think of consistency along with comparability, we're going to think internally and externally. Consistency should be within the companies itself or within the school itself. The information could be consistently calculated and consistently presented over time. That is, the same method is going to be followed from year to year. If a different method is followed, we need to make sure that people are aware of the change, and that part goes back to the understandability factor. And comparability is that the financial report should be comparable. It doesn't mean that one school is going to turn around and have the same type of net assets as another school. It just means you should be able to look from one school to the other and understand the differences between them. So those are the main characteristics that we're going to deal with, and they're very, very similar to the ones that we covered in this chapter for corporate financial reporting.